What's going on, everyone? Welcome back to the show. So I want to talk about something that I've had people in the comments, they keep mentioning something similar to what we're going to talk about today. And I want to address it because this is very, very important when it comes to just our economy as a whole. Okay, so that's what we're going to focus on today. But first off, if I can ask you to do me one favor, like the video, subscribe if you have not done so, and hit that little bell notification. Those three things will really help with the YouTube algorithm and help get this video out to others. Okay, so let's talk a little bit about this. When it comes to the economy, and if you're a person who's receiving Social Security right now, when it comes to the economy, it's very crucial. It's very crucial that we have a good economy. And I think we're seeing this now because people are looking at inflation and they're thinking, wow, what is going on when it comes to inflation? How are we going to get past this? What are we looking at when it comes to COLA next month? And so looking at inflation right now, we know that this is a serious problem. And the only solution that they're coming up with at the current time is to raise interest rates. And raising interest rates means that you're trying to cool off the economy. Okay, you want people to spend less. And that might sound counterintuitive, but right now we're in a hot market. People are spending a lot of money. And so you're trying to slow that down. When you look at the housing market, people are spending. They're buying these houses because interest rates have been low for so long. And so now they're raising it up to try to cool that off, try to cool off the spending. And the thing that I want people to think about when it comes to cooling off the economy, if you cool it off too much, then we drop into a recession. And if we drop into a recession, that is going to be terrible for people who are receiving Social Security and people on a fixed income. And I know you're saying, well, inflation, this is bad now, but if we drop into a recession, it's going to be even worse. And it's going to be worse because people are going to start losing their jobs. And if people start losing their jobs, they're not going to be paying into that payroll tax. As a matter of fact, they're going to be collecting unemployment. Okay, so they're going to be taking money from the government, not putting money into Social Security and other programs like that. And so that is going to be really, really bad. And so that's why when we're looking at this situation right now, it's a balancing act. They're raising interest rates. They're trying to cool off the economy, but you don't want to cool the economy off too much. And you have economists right now that are saying, look, we can't avoid a recession right now, but how bad is that recession going to be? And right now, companies are doing well. They're still doing well, but you are seeing some companies start to lay people off. And so we can only, in the future, we can only just watch this to see where it goes. But when it comes down to this situation, we don't want to go into a recession, obviously. And if we drop too far in a recession, it's really going to hurt those people who are currently on a fixed income. And so you have to hit that you have to hit it at the right point. You don't want to drop too low. And so there are a lot of people out there right now that are saying, look, we need to stop this. We need to stop inflation, stop inflation. Yes, that needs to happen. But it's going to take some time. And if you move too fast, it's going to be just as bad as what we're looking at right now when it comes to inflation. And so this is a story that we're going to have to continue to follow. But I do have people that are asking me that question or making statements like we need to do this, we need to do that. And another thing that people are saying in the comments is we need to stimulate the economy more. Okay, we need to have another stimulus check, or we need to have more money for people on fixed income. Well, that's another balancing act. Because if we're in a situation where we're stimulating the economy even more, guess what? Inflation goes up even higher. Okay, and then when that money runs out, inflation is going to stay where it is. When you're looking at the rental market, this is a good example. When you're looking at the rental market, you're looking at a situation where, let's say you stimulate the economy and they raise your rent from $1,300 to $1,400. Guess what? They're not bringing that rent back down to $1,300. That rent is going to stay at $1,400, and when the money runs out, you're still going to be having to pay $1,400 for rent. Rent very rarely will go down. It's usually going to continue to go up. And so that's where you really need to look at situations. And the easy fix that some people might think is, you know, we'll have some type of bonus, some type of stimulus check, or some type of tax incentive or tax break. But in the long run, that might hurt more than it helps. And so I want to know what you guys think about this whole situation when it comes to inflation right now, dropping into a recession. What do you think is going to happen in the future? Let's say 6 months from now, where do you think we'll be? Let me know in the comment section below. If you like this video, please give me a thumbs up. Please subscribe for more, and I'll talk to you in the next one. Bye.